In the metals quadrant, taking a look at a small reversal going on in the May copper futures contract. Copper's having a small pullback from yesterday's strong rally, but first it hits the highest level it's seen since April 19th of 2023. Today's high, 4.081, was up 0.52%, but then the turnaround came, taking us down to the low of 4.0175, which was down 1.05%. This is the first down session for copper in the last 4 and only the second down session in the last 7. And on a weekly basis, copper is still up over 3.3%, working on its second consecutive week of higher prices and its fourth in the last 5. China cuts is part of the reason we're seeing this volatility. Yesterday it was reported that Chinese producers, or smelters as they would be called, had agreed to cut their output, which would theoretically result in less copper demand, therefore less copper mined and less copper supply in the market. And that news drove the price of copper up over 3.25% yesterday. But today, market participants are seeing no clarity around that cut to production, and they're looking at it similar to the way when you see an OPEC production cut, yet they increase production. That's exactly what happened in February in the OPEC crude oil market. They increased production while under the proclamation of a production cut. So market participants are saying, okay, how much copper smelting is going to be cut? They don't know that, so they're kind of taking profits on some of that move yesterday. Also, the US dollar is stronger as US yields rise. You look across the curve from the 2-year to the 30-year on the yield side, we're seeing yields higher from 8 to 10 basis points, depending on where you're looking. Right now, the 10-year is up about 10 basis points at 4.29. That's the highest level for the 10-year since late February. So that's pushing the dollar higher, hurting commodities, and copper, of course, is a commodity.